Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio, we have Phil Mackintosh, chief economist at Nasdaq, to discuss the Fed's latest round of interest rate hikes coming in at 25 basis points. It's ninth since March 2022. Phil, the market appears to be reacting kind of as you would expect.
Well, they've relaxed about what they've done. So I mean, it was one of those really interesting decision points where we've had the banking crisis of the last 2 weeks, and we've still had some pretty strong inflation numbers and spending numbers before that. And so you could see the Fed maybe like weighing one of those two things more than the other, and that had the market worried. So when we talked last, the market was actually expecting rates maybe go up 0.5 percentage point. In the time in between with the banking crisis, the forward curve on bond rates has come down a lot. So the expectation is by the end of this year, rates will be getting cut if you look at what the market's saying. And so the Fed's kind of managed to tightrope walk, really, with another quarter point. The rhetoric that's coming out of the meeting notes and the conversations is kind of calmed. They're aware of the banking crisis, but they've also still got inflation to tackle. And the markets, basically, I guess they expected this, and so they've actually reacted pretty calmly.
Right, and that's why we saw the reversal in growth stocks, because of that expectation that rates might be either they're going to halt interest rate hikes or they're going to start to shift their strategy. I don't think the Fed's really telegraphed that yet, though. And I don't think they want to shift too quick so that we don't have a repeat of what we saw in the late 70s, 80s. So again, you and I have spoken about this since the beginning of the year. Are the markets ahead of the Fed?
Possibly.
Right.
I guess we don't really know until we get to the end of this year. One of the really interesting data points when you look at the financial crisis aspect of this, though, is with a lot more pressure on the balance sheet of all banks, they'll probably slow down their lending. And when you slow down lending to corporates, they tend to hire less people. And so one of the problems the Fed is dealing with is really strong employment data. Two jobs for every one person looking.
Right.
If the jobs come out of the economy because the companies can't borrow, then actually that will slow the economy down, even without more rate hikes.
Right, so it's in return basically helping the Fed out here.
In a funny way, I guess you could say that.
Right, but it's so interesting. They also have the mandate of, I know they have to slow down the economy, but once you start getting these, once you start, people are losing their jobs, then there's less spend in the economy, and then you start to think about, okay, is recession more on the table? It feels as if this time around, everyone says this time around is different, that the Fed, it just can't get out of its own way sometimes. They're balancing so many different things, and it seems to be, the next crisis is right around the corner.
Yeah, and I guess what we're seeing is a sort of a big bottleneck caused by COVID, where a lot of us didn't work for months at a time. We had a huge amount of stimulus coming through in the economy, a whole lot of extra savings, and interest rates at 0%, which were quite distortive. So you ended up with people not wanting to actually deposit money at banks to earn interest. That's all changed, and that's part of the financial crisis problem, is people want to actually get higher yields on their deposits now, and so they've moved their deposits around. There's just so many weird pressures coming through because of the COVID problem, and we're starting to feel it all now as the economy sort of sorts itself out, but there's still a lot of spending, a lot of jobs, a lot of demand, but also sort of a big switch in terms of where people's assets are going.
All right. Makes forecasting a little bit challenging for sure. All right, Phil, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.